2023 and my expectations on the income tax side. I would expect the budget to continue its focus on capital spend, infrastructure spending, green initiatives, and of course, keeping the fiscal deficit in control. Given all of this, can taxpayers expect a lot of benefits? That is where I would say that given the tax buoyancy over the years, that has been seen in tax collections, the FM should reward income taxpayers as well. And here I would divide my expectations into four buckets. I'll start with the first bucket pertaining to Make in India. There is this fantastic initiative of giving a 17% tax rate to new manufacturing setups, and that comes with a condition that these setups need to begin their manufacturing operations by 31st March of 24. Given that PLI schemes were introduced, it's been there for last couple of years. A lot of manufacturing setups are still in a setup stage. I would like to see this sunset date of March 24 extended by at least a couple of years. The second change pertains to deduction for employment of new employees, which comes under section 80 JJAA. This benefit is available even to companies opting for the concessional tax rate, and it's a benefit which is 30% every year for 3-year period. I would like to see this deduction. The threshold that is there for the deduction today is a salary threshold of 25,000 rupees per month, and I would like to see this threshold going up to at least 50,000 rupees per month. The third point pertains to R&D deduction, and there used to be a weighted R&D deduction of 200% available subject to conditions. This was eventually phased out, and there is a need to incentivize and energize R&D in the country, and I would like to see a reintroduction of this R&D weighted deduction to do that. Moving on to my second bucket, which is serve from India. Like manufacturing companies, service companies are also very important to the Indian industry, and there is a need to incentivize them as well. And I would like to see the 17% concessional tax rate extended to service companies, and there can be additional conditions. We could have conditions around generation of employment or other conditions, but it will be good to incentivize service companies also to set up and grow larger. The second pertains to M&A activity for the service industry. Today, carry forward of loss in case of amalgamations, demergers is available to industrial undertakings, and the industrial undertaking definition is not satisfied by most of the service industries, and I would like to see the definitions amended to ensure that service industries can also take benefit of carried forward of losses in genuine circumstances. I come to my third bucket, which is on the income tax side, and here again there was this concessional tax rate regime that was introduced, and it's not been very popular, and the reason could be that the current tax rate regime offers a lot of deductions and incentives, always giving a better result. So to make this new concessional tax rate regime more attractive, I would like to see the slab rates change and even introduce a few deductions, standard deduction, social security deduction, and try and make this concessional tax rate regime more attractive. Eventually, the idea should be to shift everybody, all taxpayers, from the current regime to this new regime. The second set of changes on the individual tax side pertains to taxation of capital gains. Today, definition of what is a long-term capital asset, what is a short-term capital asset, it differs for different kinds of assets. The tax rates differs for different kind of assets, and it has become quite complicated. So some simplification and rationalization around all of this is what is expected. And tied to this is taxation of buybacks, where today it's the company that does the buyback which is taxed, and it's likely that this may end up shifting to tax in the hands of the recipients. Last piece on the individual tax side pertains to ESOPs, especially in the case of startups. Certain eligible startups can defer taxation of ESOPs, but can this be extended to all ESOPs, or can taxation in case of ESOPs be itself shifted to the stage of sale of shares completely? Is one of the expectations that is there. Last bucket that I would come to is around litigation, and the VSVS scheme, the tax amnesty scheme that was introduced, was a resounding success. There is a case for reintroduction of this scheme, but with one change, which is around allowing companies to not only give up full cases for full years in this scheme, but even on an issue by issue basis, allowing companies to give up matters and settle disputes in litigation. Overall, these are my expectations. Let's wait and watch what comes. Thank you.